Hey folks, welcome to Market Intra Day Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Monday, December 15th, 2008. Well, as we get into the intraday analysis video today here, folks, at around 2:30 p.m. Eastern Time, I just want to take a little scout of how the markets are performing today. First of all, we see the Dow, S&P, and NASDAQ all trading lower on the day, with the Dow down 85.5 points, the NASDAQ down about 32, and the S&P down about 13 points. We're talking anywhere between 1 and 2% there across the board. Now, the keys today, folks, are that the market basically gapped up slightly, ever so slightly, and then sold off slowly all day long, still hovering ever since lunchtime, pretty much hovering down around these lows around this area. Now, what's going on out there? Why are we down on the day? Well, you guys know, this is somewhat what we've expected, obviously, and there's a couple keys out there that's bothering the market. First of all, you have the aftershocks from the Madoff scandal kind of scaring the markets. I mean, you have a lot of hedge fund money out there, billions and billions, if not trillions and trillions of dollars, that are now all of a sudden, these people are all of a sudden kind of looking into their hedge funds a little closer to see if they're not, to see are they scams, or, everyone's just kind of looking into it and making sure that they're not. And that's scaring money. There's no doubt about it. There's scared money there. Probably some people that are pulling out, and it's causing a little bit of a panic out there in the markets. Now, it's not much. It's not much. I mean, a lot of people realize that it's probably a one-type deal. Maybe there are a few others out there, but overall, most of them are solid out there and sound. But that's one area why you're seeing a little bit of a pullback. At least that's why it's attributing to the pullback today. Number two, you basically have no definitive mention of the auto bailout right now. We all know that the Senate rejected the bailout as of last week. The idea being that the TARP, Bush and Paulson might use some of the TARP money to give to the automakers to let them survive till the end of the year or through the new year here, and that has not happened yet. There has been no agreement yet on the automakers, and we can quickly check GM. GM is actually doing all right today. It is up 18 cents, and Ford Motor Company, here's the daily chart on Ford Motor Company, and it is up about 9 cents as well. So you can see they've come off their lows very nicely, and the anticipation is that they're still going to be okay, they're going to be fine, and they'll survive until Obama gets in office, and then you probably will see something pushed through pretty quickly. But in any case, the market's continuing to fall. Now, what's the other issue here, folks? Well, you have some key earnings this week, as I mentioned in the weekly update, which was posted yesterday, and you have key earnings, Best Buy, Hovnanian, that's retailers and housing. And you also have the Federal Reserve tomorrow, which is going to be a key player in interest rates. How much are they going to lower interest rates here? Could it go to 0.5%? And that's going to be another key. The other thing you want to also watch for is Goldman Sachs' earnings. All right, Goldman Sachs, a key player in this market. You guys know that's one of our favorites to watch for market direction, and you have to watch for that. Now let's take a look at Goldman Sachs right now, down at $1.49, $1.50 on the day. Here's the daily chart. You can see the resistance levels that we had called for a sell-off right here in the Research Center. And by the way, the Research Center has fantastic service, folks. You get about 4 or 5 different things, including videos, daily videos, monthly videos, educational stuff to learn technical analysis, as well as key levels on the S&P, gold, oil, the U.S. dollar, turn dates and pivot dates. And by the way, there are coming up some pivot dates that we will be announcing in tonight's Research Center video as well. So join up right now to get those key levels. Obviously, our accuracy speaks for itself in these markets. In any case, we called that move up in Goldman a bearish candle, and you can see what Goldman Sachs has done. We called this bearish right on this day and look for a pullback. Sure enough, you've got that nice pullback. Now we go into earnings on Goldman Sachs, and the key question will be, well, where does Goldman trade after earnings? And we can look at the intraday here quickly, and you can see Goldman's really been trading in a sideways motion ever since really 10 o'clock. And that's really what that's telling you there, is that people are just on pause. What you are seeing here lately is a little bit of buying. You see we touched the 50 moving average there. That's a resistance point. You got to pull back. Now you're trying to up it again and test it again possibly. But needless to say, we're on pause. Now, in the final hour here, Goldman Sachs could get a little volatile in that 3 o'clock time frame, mainly because you have people positioning themselves on the earnings. You have some people saying, you know what, I don't want to be in for earnings and I'm moving out. And there are going to be other people that are going to say, I want to take a shot here on earnings and move in. We we don't play earnings. It's a general rule. It's a 50-50. It's not worth playing earnings in stocks, really. It's just way too high risk. So in any case, but keep that in mind. You might see a little fluctuation here into the close on the markets, that 3 to 4 p.m. time frame as well. But again, the idea here, light volume today, folks. Everyone's kind of waiting for Goldman, waiting for Best Buy, waiting for Hovnanian, waiting for the Federal Reserve to release. You also have some CPI numbers coming out here tomorrow and the next couple days, some other economic data. So there's a lot of stuff over the next couple days that is going to be key in this market, and the market's really going to look for that to get a bid or a drop off of that. Now, you guys, again, those that have the research center know our projections, our key levels going out a week to 2 weeks in advance, and we are sticking by that as of now. Now, we always reevaluate, but nonetheless, those key levels should be watched very closely, as they are good plays off of them and into them. A couple other things. Let's go to the intraday futures chart. Let's just take a look at the intraday, since that's what this video is based on, the intraday analysis. And you can see early on you had a little bit of a resistance double top here. Now, a lot of people would say this is an M pattern. We don't believe it to be a true M pattern. It's an in spirit of M pattern. Why is it in spirit of? Well, because M patterns technically happen at the highs of charts. And you can see back here, you weren't at a high here. However, an in spirit of still can play out, and you did see that play out pretty nicely. Just taking a look here. And there it is. There's your MA pattern on the futures chart. And again, you bottomed out there, then you're bouncing, and then you're coming back in a little bit here, kind of fluctuating just off the lows ever so slightly. Now, one thing I would like to draw in is a support line. Look at this support. All right, you see how this closed below, but you never got confirmation by confirming it on the downside. Instead, you bounced back above. That means this support is still intact. And look at that, came right back into that support and bounced off again. So again, some of the key things we teach in the research center as the educational side of the service. Again, it has about 5 or so services in it. Some of them are market guiding, some of them are educational, and some of them are stock picking. But again, that's the key, folks, is you understanding how to read the technicals of any chart and truly understanding. And notice again, this M pattern, you have the double top right there. So double top M pattern. And again, you can see the fall and the bounce. And just note here also is that you came up here on the M right into the 50 moving average, sold off to the 20, bounced back up right through the 50, but couldn't hold it. It got too much energy expended there to hold it, instead falling back down. You're noticing a bounce right here at the 200 moving average, but then ultimately taking it out, recapturing right into the 20, falling back to support, back to the 20, and now coming back to support line right here. So you can see the market is trading. Notice the volume too, guys. This is a great example of what I mean. Look at the volume. So you started out with decent volume this morning, and this is still light volume, but I'm saying for the course of the day, that's decent volume early in the day, and it's just gone downhill ever since, and we do anticipate it going downhill into the close. You should see a little pop at 3 o'clock, 3:30, 4 o'clock, as people position themselves on the front of Goldman Sachs' earnings tomorrow morning, and a couple of the key economic data points coming out. But again, right around tomorrow, you're looking for things to get a little quiet again until that play tomorrow into the Federal Reserve. Now, last but not least, what I want to just touch a base on, folks, again, is the Research Center. Come join it. Fantastic. You'll learn more than you ever imagined. It will improve your trading. Even give it as a gift into Christmas. Fantastic gift into Christmas. Alrighty, folks, that's enough for today. Let's just do one more check on the markets here. And as I leave you here, folks, the Dow is down about 75 points, the NASDAQ down about 30.5, and the S&P down about 12. Take care, and those of you that are with us in the Research Center, join us at the end of the day for our market recap, our key levels, and everything that was contained in that Research Center to give you everything you need to know for tomorrow's technical levels and the future's technical levels. Take care, guys.